try to keep it conversational as to be.
So good afternoon to one and all, and it gives me immense pleasure to welcome you all in this second study group of INDAS and auditing assurance standards and financial reporting. And kudos to core group members who are continuously working, and they have planned one more which is in next month. So looking forward for your active participation in that as well. With this, yes, so almost 10 study groups are on, and requesting you to be a part wherever whatever of your area of interest is. And with this, may I request our dynamic and most humble chairman, CA Ketan Sayya sir, to address us.
Thank you, Jinal. Thank you so much. Let me thank Santosh Bhai for a wonderful carving out of case studies. I think this is the need of our not only financial instrument wherever whatever possible. I will request to the core group member that if we pick up those case studies, if we pick up disclosure of some companies on some particular item, I think that will be a great learning. And India's still there are a lot of anomaly, like people keep discussing between, and they have like banks are yet to implement INDAS, and the subsidiaries are having INDAS, the bank per se has AS. So people for subsidiaries, we also audit some of the subsidiaries, so we keep creating two set of financial statement. And there also a lot of time you are confused that whether this is AS or INDAS and how do you do it. And then the complications like this, the relating to the specific areas of making provisions on account of the expected credit loss or something on the financial instrument. I think this study group has got a lot of stuff for discussion and thread by discussion and learning. I think the best model is this model that you keep it in the format of case studies instead of one-way lecture. Maybe we just give the question and listen the answer of people, and then maybe the speaker can give his final view. Of course, that will require a study. I don't know today we all have studied or not, for example, on these subject. But in future, if we try and keep this format of coming with a self-study, then there will be a lot of healthy discussion, input, deliberation which can happen on this. And I think that's the whole purpose of study group. So all of you have been sparing your valuable time and coming over here, and I'm sure this will generate a lot of synergies in the future as well when we work upon the INDAS related areas. The last year only we had one publication also on INDAS. So look at that also. We had one round of discussion for NAFRA. We are thinking of bringing one publication which is version 2 or the part 2 of the case studies in NAFRA which have come up. Similarly, INDAS also, if you at your ease, you can go through the current publication, and then we can take a call about to bring up one more publication, whether in soft form or in a physical form or something like that. And the study group can work upon the disclosures which are done by the listed companies. So wherever you find there is some different, unique, abnormal, whatever, other than standard disclosure, if you find some other disclosure, be it something which is not there in the other companies, that kind of unique disclosure if we get, and if we are able to compile in any of the disclosure area, we should pick up them, and maybe we can again have a discussion on study group on those type of disclosure, and we can think of bringing one e-publication also in a soft form where we don't have to be worried about selling, or we don't have to be worried about cost of publication, being it in a small soft form only. And this is still not such area where we bring publication and it will get sold. Yeah. And that's again put under the restrictions के publication में अभी बोल रहा था कि in one of the topic अगर हम 300 बनाते हैं तो 100 भी नहीं बिक रही है तो then there is a question mark. But then instantly somebody said, "Okay, why we want to print? Let's not print only and just give a soft form में free में दे दो सबको." So moment it is in soft form and moment it is free, naturally people will study, people will apply their mind, and that will be useful for the members. So thank you so much once again, and thanking to Santosh, thanking to all of you for sparing your valuable time, and keep this study group active, keep this study group buzzing. Thank you. Over to you, Timal Bhai. I think Timal Bhai is going to do the honors job of introduction of our learned speaker, Santosh ji.
Thanks, Ketan Bhai, the chairman of the WRC and General Madam Secretary of WRC. After a couple of years, we have started this group and we want your participation to move it. So let me first introduce our today's speaker, learned speaker, Santosh Malar. He, having passed the CA examination with all, he has a rank holder, merit rank holder, and worked for the large audit firms like EVA and Deloitte, and in IFRS technical tests for more than a decade. Has a 20 years of professional experience in accounting, advisory service, and audit and assurance. Has extensively dealt with the complex technical subjects like accounting issues with very large clients. Santosh has been serving as a special NYT on the ICAI's Accounting Standard Board and has been part of a several technical group of ICAI, including on INDAS 12, INDAS 116, Combined Financial Statement, Guidance Note on SEBI ICAI regulations, as per INDAS, Guidance Note on Service Payment, Guidance Note on AS 25. He is also author to the various books like the INDAS Practical Guide to the INDAS under MAT, Practical Guide to INDAS. He has been author several media articles on accounting and valuations. He served as the visiting faculty at Government Law College, Mumbai, Security Law course, speaking on accounting standard and corporate governance. He is a member of the Accounting and Audit Committee of Bombay Chartered Accountants Society. With this vast experience, we welcome today's speaker.
So very good afternoon to everyone. As Sir mentioned, today's topic is on financial instruments under INDAS 109 as well as INDAS 32. We'll touch upon. So as Sir mentioned, we have what I've done is I've compiled a few case studies. We'll do this in Q&A form. So because most of us by now are fairly familiar with the basics of INDAS 109, what is a financial asset, what is a financial liability, etc. But nevertheless, during the course of the discussion, if anybody wants to raise any questions or share any doubts or perspectives, then most welcome. As again Sir said, that the idea of this study group is to keep it more interactive. So I'll try to make most of you speak rather than speak more, and obviously we will try to have some iterations. So with that, let's start with the first question, first case study. Yeah. So what I'll do is I'll request each of you to read the question and then we can discuss it. Right? So who wants to start first? Can you start first, please?
A limited issue compulsory convertible debentures which are mandatorily convertible into shares. The exceptions in Index 32 paragraph 116(a)(b) do not apply in extent case. A limited that is the issuer has sought your view on how this issue shall be classified under the case.
Yeah. So the first one is relatively simpler one. Okay, but it can be a little bit obnoxious, right? So many a times when we do audits, many of the companies say that if it is compulsorily convertible, by default, it is an equity instrument, right? So what do you think? So let's say if I'm a company, you're my auditor. I'm saying, okay, boss, this is compulsorily convertible into debentures. So you call it as equity under INDAS. So what are your thoughts on that?
We'll have to read further terms to decide.
Okay.
The answer is not very straightforward.
Okay.
Whether it's an equity or it's a liability.
Okay.
So there are like multiple conditions. Okay, whether it's a fixed for fixed, whether the liability issue, which is a like probability of the outflow, is decided on the date the instrument has been issued or not.
Okay.
And so there are like many other conditions are also there.
Okay.
It's very straightforward and simple.
Okay, yeah. So the idea is to build upon this. So let's say if it's fixed for fixed. So let's discuss what is fixed for fixed criteria. So at the time of the issue of these instruments, the conversion ratio has to be fixed. So the number of debentures that is going to be converted into the number of equity shares that will be, upon conversion will be issued. That has to be fixed on day one, isn't it? That's the basic condition for it to be treated as equity. Oftentimes in practice, because of section 56 of Income Tax Act, the client gives a pushback saying, I cannot fix it because otherwise, if it's different from the fair value at the date of conversion, and if there is a delta, then it can, of course, one side is now eliminated by, one of the amendments but let's say there can be a tax implication. So if the scenario is like this, at the time of conversion, the ratio will be fixed. The ratio will be discovered based on that day's fair valuation, and it will be fixed at that point in time. Does that also meet the requirement for equity classification? Yes.
No, it will not fit. But if the formula is pretty different, then
What do you mean?
so let's say you determine that. So it should be. So how you arrive? So basically, how you arrive at the calculation? If that thing is different, then it can.
How you arrive as in, so it will be like the date of conversion, the fair valuation will be done as per, let's say, a independent external valuation report, and basis that the ratio will be discovered. Is that good enough for equity to be classified as equity? Any other thoughts?
No.
No. So the reason being, when it's dependent on particular day fair value.
Yeah.
And the ratio will be derived based on the fair value. Then most of the scenarios will be fall into the liability.
All right. So the way INDAS 32 goes about it is that in order to take equity risk, okay, the investor in this should be his interest in the instrument should be fixed. So if it is dependent on the date of conversion card fair valuation, then what happens is, let's say if the value goes down, so the investor will get higher number of equity shares, and vice versa. If the company has performed well and therefore the fair value goes up, so then he will get lesser number of shares, right? So his interest in the instrument is intact in a way. So therefore he is not assuming the equity risk and rewards in this instrument. But as against that, let's say if it is fixed on day one itself, then subsequently whether the company performs well or not, and therefore its fair value keeps going up and down, it doesn't matter. The investor's interest has been locked in on day one, and therefore he's truly a equity shareholder. So as per INDAS 32, the criteria is that it has to be fixed on day one. Many a times these days, especially in case of private equity investors, there will be some anti-dilutive terms. There will be some terms where if there is if subsequently the company raises funds at a lower fair value, then there is a match-up clause that, he has to be compensated by a higher number of shares or by, so all those clauses do not satisfy the criteria for equity classification under INDAS 32. Those are protective rights, and that will not meet the criteria of fixed for fixed. So that is one thing. As against that, let's say there are anti-dilutive clauses, like supposing many a times they are simpler criteria. Okay, dividend. If the company declares dividend, then equivalent, interest of the CCT holders should be made up by, let's say, issue of shares. That perhaps there is some scope of arguing that it will still meet the criteria of equity.
Because equity, you are treating it similar to an.
Exactly, you are treating it as at par with the other equity shareholders.
But in that scenario also, it would be limited to the expected amount of.
Yes, yes. And again, in that case, how you have compensated the CCD holders will have to be examined. Okay, so great. So I think the first question is fixed for fixed. So I think you all have, like most of you all have got it right. So what is your answer? Is it equity or liability? It's equity, right? Is it fully equity?
Fully. We'll have to look at.
Will determine if there is any coupon. If there is one coupon, what are the.
Can you declare debenture without any coupon in India?
See, it depends if it is 0.0001.
So इसीलिए मैंने नहीं दिया है, but because it's by nature debenture, and therefore it will have to have a coupon. It may or may not be material. That's a different question. But principally, if it's debentures and not preference shares, then debentures, since they will be bearing coupon interest, and debenture interest is mandatory to be paid. In that case, this instrument takes the classification of compound financial instrument, right? So part of it will be depending on if it is fixed for fixed, mandatorily convertible. If it's fixed on day one, then it is, that portion is equity. The debenture is, the interest portion is liability. How do you calculate the, how do you bifurcate this?
Usually the fair value of what will the market versus how much you are paying.
So आप DCF कैसे किसका करते हो? So the debenture interest, let's say if it's a 20-year or 10-year. So during the course of 10 years, what is your cash outflow in terms of interest payouts? That you discount it to the current borrowing rate of the issuer. The rest of it goes to equity. Clear? So I think that's it.
So before you go to next case study,
yes, sir.
Of course, this case study does not have that way implications. And if you all are interested, you can think this case study in the scenario of accounting standard also. Of course, this will not have any impact, but other case studies, if at all they have, implication, like think that if it is a AS company, what will happen? Like, of course,
AS company should become liability, and if assuming that could be equity there.
That's why sir said, I think it will not have.
A lot of difference in the way balance sheet is looked at.
Correct. So if wherever possible, and you can discuss that also, so that will also be, make your thought and processes a bit more clear. If time permits, of course, with the speaker. That was one, suggestion.
Sure. How will the investor classify this? So we have agreed that this is a compound instrument from a issuer's perspective. What will be the counterparty do? Investment, but what will be the measurement basis?
Investing in debentures.
Yeah, but what he's saying is that whether it will be amortized.
Amortized cost होएगा, FVTPL होगा, FVTOCI होगा.
All depend on what is their purpose. If they want to hold, get the converted, then all it would be amortized.
Compulsory convertible है तो convert ही होगा. That cannot.
come back.
Yeah. So how do you go about classification, Tinku, of financial asset? Is it entirely based on your business model, or is there anything else?
SPPI test.
SPPI test is also there, right? SPPI test, mein, how will it fit into? You first get into the contractual characteristic of the cash flows, right? SPPI test. Business model test तो बाद में आता है. उसमें क्या होएगा इसका CCD का? But what about the conversion clause?
Partly करना पड़ेगा ना, जो debt portion है वो और the equity portion है, you will have to split there also.
But contractual characteristics, SPPI test, you do it at a full instrument basis. So from the holder's point of view, SPPI test, amortized cost criteria will be met if the conversion ratio is not fixed. If it is fixed, then it's at par with any other equity instrument. right? And then there is a part of it, debenture interest that you'll get. So it will not meet the criteria of SPPI test. It will have to be FVTPL. Whereas if the conversion is set up in such a way that a certain IRR is promised to the investor, which means that my principal plus my IRR, that's what I have been promised. Kul milake, the conversion ratio plus the interest. So in that case, one can still argue that SPPI test is met. And then depending on, as you earlier said, that depending on the business model, as in what you want to do, you have a business model to hold it till contractual maturity or to sell or to do both. In that case, you will have to see the business model, right? Okay, so that was about this. So I won't read the answer because that's what primarily we have. Let's come to the second one.
Just one thing on, you said if the SBI test is not met, it is falling into the fair value of the account. And take an example, the investor is a majority investor in the company, and the company which they have invested is subsidiary. Right? Then in that scenario, will this be called as an investment to subsidiary?
So it's a holding subsidiary relationship, but you are saying SPPI test is not met. SPPI test is not met means the conversion is not fixed. No, it's fixed, right? In that case, you can carry it at cost.
Then you will use AS20, India's 27 exemption of subsidiary investment in subsidiary at cost.
Yeah.
So there you have option of fair value also.
Yes, it is optional. Yeah, as a policy choice, you can.
Mostly 99% people will take at cost,
Yeah.
unless you want to bring that fair value in the books.
चलिए टिंकू आप ये पढ़ लीजिए सेकंड केस स्टडी.
Limited a central public sector entity as a borrowing from a bank. As a part of borrowing, guarantee is provided by the government. This is a precondition for obtaining contribution to the loan facilities to the government. Accordingly, another central public sector undertaking or is a limited fees guarantee as a part of. As long as the loan continues, guarantee will continue, therefore due to the term of guarantee is not cancelled. Fortunately, I got
So this case study I built up based on a EAC which was issued some months back. So the scenario is like this. There is a PSU company which has a bank borrowing, and as a part of the bank borrowing arrangement with the bank, a guarantee is given by the government, by, so to say, a holding company like a president of India. There is a precondition. This is a precondition for obtaining and continuing with the loan facility. Accordingly, another central PSU entity B has provided for guarantee to bank on A's behalf. There is a commission cost between A and B as a part of the arrangement. As long as the loan continues, the guarantee will also continue, and therefore during the term of the loan, the guarantee is not cancelable. So it is, so to say, an integral part of the borrowing arrangement. The question is, how does A, that is the beneficiary of this guarantee arrangement, and the borrower against the bank, how will A account for this? More specifically, as you can see in the title of the case study, can this guarantee commission, the query section of the EAC was whether this guarantee commission that A is paying to B, can it be treated as a incremental cost and therefore considered as a part of effective interest rate for the borrowing? Generally, EIR में क्या आता है? Whatever incrementally bank charges or upfront processing fees, etc., that one pays, right? So the counterparty is the lender himself. here the cost is incurred to a third party. So to say a third party, the question is whether whether B can be considered as a third party entirely, because as you can see in the facts that the querist has tried to argue that it's an integral part of the borrowing arrangement. It's not cancelable. क्या लगता है आप लोगों को?
The three conditions of cannot, you will not get a warning.
Right. Okay. Anyone else?
I would also agree with him.
Precondition.
Seems to be that way. But I have another point, but maybe later on, because when you do the effective interest calculation, do you exclude the government grant? There is a government grant involved. Both elements have to be looked at, but I think yes, you should consider that because there is a cost. Because of the guarantee also, you would have got some saving of interest from the bank also. The bank would have given maybe at some discounting because there is a guarantee from another PSU. So there would be a reduction in interest rate also because of the guarantee. Hence, in that sense, it makes sense.
Okay, we'll come to that. But does everybody agree that this is to be considered as a EIR? So when you consider as a part of EIR, effectively आप क्या करते हो? उसमें, so you will project during the entire loan term what is the commission payable to be. You built it up in your,
Then you calculate.
and then you
Calculate
did it as a finance cost, right? Okay, I think that is the right answer. So the guarantee is provided by B Limited is a precondition for obtaining and continuing with the loan facility. As long as the loan continues, the guarantee will also continue, and therefore during the term of the loan, the guarantee is not cancelable. Fees paid or received between parties to the contract that are an integral part of the effective interest rate and transaction costs are to be considered while applying effective interest method. Further, the fees that are an integral part of the effective interest rate of a financial liability include the origination fees paid on issuing such liability. Since the guarantee fee initially as well as subsequently in the extant case is not paid between lenders and borrowers, the same cannot be considered as fees paid or received between parties to the contract that are integral part of the effective interest rate. The transaction costs are incremental costs that are directly attributable to acquisition or issue of financial liabilities, and an incremental cost is one that would have been incurred if the entity had not acquired or issued the financial instrument. In this context, the guarantee fee paid initially as well as subsequently in the extant case is an incremental cost which is directly attributable to the borrowing, and as this cost would not have been incurred if A had not obtained the borrowing. Accordingly, the financial guarantee fee paid initially as well as subsequently by the company should be considered for the purpose of computation of effective interest rate while measuring the loan liability at amortized cost in compliance with the provisions of INDAS 109.
But they have not dealt with this government grant in this years,
See here, at least in the query, in the facts, yeah. So nothing came to the way the querist had submitted the facts. Nothing came to the attention of the committee that if it is the commission was whether it was at arm's length or not.
No, not from, see, in the facts they are saying is the government has given a grant, no?
Yes, but then it will be below market commission only if.
Grant is always, it's like a grant, the company would not have incurred a cost.
Yeah, but so if the commission which A is paying B, if it is at market terms.
AB understood, but there was also one grant from the government also, na?
नहीं ग्रांट ऐसा तो नहीं था, गारंटी.
As a guarantee. As a. Sorry, I read it differently, sorry.
But I think what you are saying is if there is a commission which is at below market terms, for example, then whether that gets into a government grant or no. See, here one can, even if that had been the case, because this is a financial arrangement, perhaps grant aspect, the definition of government grant is if
They come out of it.
you know, it wouldn't probably get into government. It's a financing arrangement.
It's a financing arrangement.
But if it's a free of cost guarantee by a government agency or another PSU,
Then perhaps you will have to
factor it at fair value.
factor in at fair value. But see, in terms of INDAS 109, you account for guarantee from a guarantor's perspective.
Not from the receiver's perspective.
From the receiver's perspective, in fact, in one of the earlier EAC, that clarified it's optional to account for it.
There are two views.
Mirror accounting is possible, but not mandatory.
Even in Dolphy's book, they have given an example. Two views have been given.
It is not mandatory as such. So in that case,
accounted.
correct.
So the full liability has already been accounted.
Yes. Any other questions on this case study? Do we have online people also?
Yeah.
Okay, if I think they cannot speak up. Achha, yeah. If anybody who's taking the what do you say, the study group discussion online, if they have any questions, most welcome to maybe I don't know if unmuting is possible, but maybe chat box pe you can probably type your questions. We'll just see if we can take it later. Okay, who will read the next case study?
I'll
Sure, thanks.
Case study 3 is about provisioning for expected credit loss on the amount due in the course of business from government organizations. And the question is whether any exemption is available from making provision for expected credit loss under INDAS or other guidelines issued as on date where the clients are central government or state government or autonomous body or PSUs.
So again, this is I borrowed from one of the EACOP, one of the ITFG, FAQs. In India, as we know, many companies who do business with government or government PSUs or government agencies, invariably, unfortunately, there is a delay in the realization. Commercially, many companies believe that because it's the counterparty is a government organization or a government of India undertaking or a PSU, and it is backed by a sovereign guarantee, there is no question of default risk. So many a times you may also perhaps come up with this argument or counter argument by the client saying कि ये तो गवर्नमेंट का ही ड्यू है, गवर्नमेंट ऑफ इंडिया थोड़ी ना पैसा डुबाएगी, तो where is the question of provision for ECA? Is that argument tenable under INDAS 109 or?
INDAS 109 also talks about the time value of money. That's what the ECA comes into the picture. Whether you are working with a government organization or a normal debtor, times of value of money should have impact.
Yeah, absolutely. So one of the essential characteristic of ECL provisioning is time value of money. And I think in the answer we can probably jump to, there is this paragraph B5.5.35 of 109 permits use of practical experience for measuring expected credit losses if they are consistent with the principles of paragraph 5.5.17 of that standard reproduced above. Paragraph B 5.5.35 of INDAS 109 cites calculation of of expected credit loss on trade receivables using a provision matrix as an example of practical experience. Impairment requirements of INDAS 109 are mandatory. In particular, receivables arising from application of INDAS 115, it should be, if measured at amortized cost, are subject to impairment requirements of INDAS 109. So there's no exemption given in 109 from compliance with impairment requirements of that standard for any entity. No exemption is available from making provision for ECL under INDAS or other guidelines issued as on date, where the clients are central government, state government, autonomous bodies, PSUs, whatever. So absolutely, time value of money is an essential characteristic of ECL calculation. So you cannot deny the fact that there are delays in the realization beyond the credit terms, and therefore.
But there people are not arguing that it would be less than 12 months because they are current.
No, even in that case, what happens if you look at that example which that standard gives, the provision matrix.
People are making a lot of arguments.
Correct. So if you go by the method of that example where you calculate the flow rate based on the aging, the past realization, so उसमें आपको थोड़ा तो आएगा. Now that number, if it is material or immaterial, so from audit point of view, one will have to still calculate the ECL based on that provision matrix and see whether it's material. So if it's less than 12 months, you may still get to a figure which is not a very material amount. But in fact, in one of the NFRA findings also, I think they had said that.
NFRA interaction series, they are mentioning ECL very clearly.
Yeah.
But if real estate people are arguing that I account POCM basis, I have not given possession of the flat.
Yeah.
I have a debtor.
Yeah.
Now, there is no question of money not coming because possession तो मेरे पास से नहीं आएगा तो और भी अच्छा भाव बढ़ गया.
Yeah.
So cancel करेगा तो भी problem नहीं है. And for delay, I am in a position to charge interest.
No, so
because of my dominant position, I charge interest also if there is a delay in payment from customer.
So Prashantji, there is still some merit in that argument because
if you see a lot of real estate balance sheets, I don't see
so much per se, correct. No, so per se, ECL is required principally.
Principally, obviously, yes.
But what happens because of that legal kind of so to say a collateral that the company has? See, 109 is very clear that in calculation of loss given default, you need to consider the value of collateral. So hypothetically, if there is a default, and that's commercially what the client is also trying to say, that if there is a default tomorrow, then I will take back the property, even if it's stamp duty paid, etc. And I will waive off whatever I have already collected. Okay, part of it subject to RERA provisions. I think 10% आपको रख के बाकी सब देना पड़ता है, and that value may be higher. So there may effectively
right to charge interest also.
Correct. So effectively, the loss given default will be very small, hypothetically. So that argument
So
that
real estate, there is a lot of this argument.
वो फिर भी देख सकते हैं कि क्या है ट्रेंड वगैरह क्या है. But as a policy, ECL will have to be.
That is true, but I was trying to highlight.
No, but that you're right. So वो एक tenable argument है मेरे हिसाब से.
Tenable है, because क्या है कि उसमें sometimes you try to argue this with the client, it is very difficult to.
थोड़ा establish करना पड़ेगा कि trend क्या है आपका. Last 5 years, have you seen any case where there is default and how much you have actually?
Yeah, that is true. But in majority of the cases, you will never find. People losing money.
So accordingly, you also can factor the aging.
अगर एजिंग वैसे ब्रेकअप चाहिए क्या ना तो it's all depend on how you are calculating aging or so the table the matrix you develop if you are factoring appropriately if the collection period due period is less than 12 months nothing is going to come there.
पीरियड लेस देन 12 मंथ्स ही रहेगा क्योंकि लास्ट 2 डिमांड पेंडिंग होगा, लास्ट 1 डिमांड पेंडिंग होगा, प्रैक्टिकली वैसा ही होगा.
So depends. I think your scenario he's saying is POCM.
हाँ,
Completed contract में तो debtors आएगा ही नहीं.
टेडर ही नहीं आएगा बुक्स में.
POCM में it will be less than 12 months because
You would have just done some incremental work.
yeah. Unless that guy has not paid you since a long time.
Most of the cases, home loan is there. That is also checked.
Yeah, that is again another collateral. Yeah.
So if you see most of the real estate balance sheets, and we see
It is hardly. Yeah. I agree.
One majority.
I agree.
Majority POCM में नहीं है. Majority is income.
But now if you see this year onwards, some
have started.
in fact,
Noda has started.
good ones like Godrej Properties, Anirudh, they have gone with they have changed to POCM.
For problem क्या है? People who have debt heavy, they are not wanting to go to POCM. Because as soon as you go to POCM, you cannot capitalize interest. You have to debit entire interest to P&L account.
Yeah.
So as soon as you do POCM.
Yeah.
So that is the reason if you are debt heavy, you cannot go into POCM. Because you will have complete interest debited to P&L account from day one.
Yeah.
Which is sometimes not very, it doesn't fit in their business model or initially it will hit
True.
P&L very badly. So people,
Depends.
heavy companies will not go into that model.
Correct. It depends on which cycle you are in. So possession आप ज़्यादा दे रहे हो तो perhaps that year. So for example, my observation and like not that we are. So you look at Loda developers. अभी हाँ macro. They changed it. Correct.
Just recently, Oberoi was the only one who was doing it from the day one.
And DLF.
DLF, yes, partly. DLF था. Shobha नहीं था, because I did analysis of 10 to 15 real estate companies.
Right.
And eventually I came to a conclusion that there are only 2 or 3 players who are doing POCM. Out of that, Loda was the person who has changed recently. Macrotech developers recently changed.
So Godrej and Loda were the only Bombay-based ones because from a RERA perspective.
Godrej initially was a completed contract. Recently, now
they all have accepted percentage of completion. But the point is that if you look at northern states, the registration comes later, unlike in Maharashtra. So stamp duty, there is an agreement for sale.
Correct.
So,
there is a sale agreement.
So the real estate developer doesn't have much of a security, so to say. So in that scenario, getting to POCM was still, thoda stretch karke kar sakte the. But if you look at all Maharashtra-based listed real estate developers, most of them were doing completed contract methods because यहाँ पे पूरा ही starting से ही stamp duty because of various things. Maharera. So South-based या Maharashtra-based कोई POCM नहीं करता था, but now they have started. This last 2 quarters onwards they have. Okay. This is again EAC-based case study. कौन पढ़ेगा? Any volunteers? It's not a big one, so yes, please.
Case study for accounting for repossessed assets. EAC opinion, EAC 1796-22. Classification of loan assets and collateral repossessed under SARFAESI Act 2002 as non-current assets held for sale as per Ind AS 105. So loan against the collateral of mortgage asset by an HFC, collateral repossessed on default by the borrower. Since the collateral is repossessed, not in satisfaction or settlement of the loan asset, the repossessed collateral cannot be directly adjusted against the outstanding loan. Question: can the repossessed asset be classified as asset held for sale by the derecognizing loan?
So many NBFCs or housing finance companies have this issue. What happens is you give loan against the, so now we are on the other side, right? We discussed on the real estate developers accounting. Now let's divert our attention to the lender of these companies. So that scenario, many a times in India, what we see is that NBFCs give loan against property, housing loans, etc., where the collateral is a property, not necessarily a housing loan, but anything. So this is specific to a housing loan, but it can be anything. It can be loan against property, a LAP also. The borrower has defaulted. As a part of your right, you have attached the property of the secured property, and you have taken the possession, so to say. The question is, should you de-recognize the loan and recognize the property, or you should keep the loan in your books and showing it as a collateralized loan? Legally, of course, there is no ownership interest in the property because it's a security. It's not, you have not, to establish ownership you need to pay stamp duty. वो सब तो कोई करेगा नहीं, because then you need to go through the process of surfacing. There are 3 auctions. There are various RBI prescribed and National Housing Bank prescribed procedures. Question is, at what stage you will de-recognize the loan, if at all you want to de-recognize the loan, and should you recognize the property? Because even if you don't have it as an ownership, we know that in INDAS there can be scenarios where you're not the owner, but you have the asset in your balance sheet. Good example is your lease, right? Lease mein kafi baar hota hai. You have the beneficial interest in that property. So is the question clear, first of all? Yeah. Should it be classified as a property and therefore automatically, because you're a housing finance company, you will not own it to do anything else. आप भी बेचने के लिए ले रहे हो, right? So you want to monetize it at the earliest. So it will so if you recognize the asset, underlying asset, you will have to classify it as asset held for sale.
I don't know, I'm not sure about housing finance, but typically when you repossess, does the interest on the loan and other things stop?
See, interest तो वो default कर रहा है इसीलिए.
But otherwise legally interest stops.
So legally what happens that from the proceeds of the sale, you are entitled to recover your principal till the time it was defaulted, your outstanding interest.
But that is from the proceeds.
From the proceeds.
Not now.
And your penal interest. Typically, your loan agreement will also have a penal interest.
Correct.
Right? 2%, 1%, whatever. वो सब आपको, but realistically, unfortunately, because of the way auctions and whatever vested interests are there in India, very few banks or NBFCs are able to recover the full value. Even the poshest of the properties of Vijay Mallya, SBI could not sell it, right? So reality is this, but answer to your question is yes, you are entitled.
Interest. So risk and reward अभी तक loan का गया नहीं है.
But in case of repossessed, if you see I think the surfacing, it doesn't allow to charge interest again once the property is handed over.
No, till that time you are entitled to interest.
Till the time of the possession of the property under surfacing.
Right. And उसमें वो वैसा भी है. In fact, we'll see in the solution that if you end up recovering more than what you have to refund it back. Theoretically वो है. Practically कोई दूसरा story होता है.
Recovery नहीं होता तो
Return कहाँ से करोगे?
So from the default to surface it takes couple of years.
Correct.
Minimum to couple of years. And from surface it to for the realization of asset, it may take 5 years. Because property are unable, they are unable to sell. Definitely not.
वो
market value मिलेगा ना.
Liability of the borrower, once under surface when we acquire the asset, the liability of
मतलब technically we are saying that the risk and reward of the loan is with the HFC till the time surface happens.
yes.
बराबर है. And once the surface happens, then the risk and reward is, you have given away the risk and reward.
So depends. So you can't say you have done downfall is yours. If you don't manage to get enough money, then it's your risk. आपको वो उतना पैसा भी आपका जो बनता है वो नहीं मिलेगा.
Correct.
Extra कुछ मिला theoretically, then you have to part to the.
I was trying to just examine whether the risk and reward transfer criteria is met or not.
So one-sided है, risk आपका है, because your money is at stake.
Reward, but there is risk.
There is no
You
reward.
get the full money what you are supposed to get at best.
At best, yes. At best. At best.
or an issue arise, may, so in case of such property, if I have given a loan of 1 crore and subsequently it surfaces and or the fair value is 30 lakhs, okay, so can you say at the time of sanction my things were proper or not, whether it was fraud was there? That's the other angle which we have to assess.
Yeah. नहीं, ये सब केसेस में बहुत बैंक का फ्रॉड ऊपर आता है, because then in that case
property realization में जब भी difficulty आती है तो then it goes back to the root that whether the
plus what happens, there is a cartel when in properties, na, there is a cartel which ensures that the auctions are not successful.
So whether INDAS or AS, situation remains the same.
Yeah. So this question was more from a
derecognition point of view.
Perspective of derecognition. Recognition. So underlying property आपको recognize करना चाहिए. That is the moot question. And the other angle is from the bank or the NBFC or the HFC's perspective, all the ratios, whether it's GNPA or NNPA,
as soon as you
that is
will be better.
Only exactly. So at the moment you derecognize it, you have cleaned up the mess. So partly so then आपका ratios better रहेगा.
So all the NBFCs and the banks there will be more than happy to derecognize. Securitization कर दिया जैसा.
Issues are there. They have to maintain certain percentage with the home loan versus the non-home loan.
नहीं, there are even in NBFCs there will be a lot of percentages.
GNPA ही हो जाता है ना. आपका ये एक बार साफ हो गया. So your GNPA improves
and banking covenant में भी रहता है ना GNPA, NPA सब.
6 का एक लिमिट रहता है, 5-6 का. So क्या लगता है प्रिंसिपली वो तो ठीक है, that is the other thing, but accounting wise आपको लोगों को क्या लगता है? Okay, so sir is saying कि ये derecognize करके loan derecognize करके the underlying asset
I don't think
recognized.
At least I don't think so. I have not read this year.
Okay, so have you got the risk and rewards of the underlying property?
Risk is there. On property, without my consent, nobody can acquire.
But are rewards there? Rewards for the bank, not for the bank employees.
The rewards of the loans have anyway stopped back because the interest is not accrued. So that reward is anyway stopped. Your asset.
But loan का risk अभी भी है ना?
Loan का risk that is continuing.
The risk of the loan is continuing. So derecognition criteria,
Credit risk तो है ना?
trying to evaluate from that point of view whether you can say that the risk and reward is transferred or risk and reward now the asset is derecognized from my books.
And taking the real estate, क्या होता है? Value of the assets are always increasing. That's the other point, always.
But sir, even this, you're correct. But despite of that, if you see the best of the properties in Mumbai, in the heart of Mumbai, अभी आप you see the SBI matter only, na? Kingfisher. So the airport properties of Kingfisher, they couldn't sell it despite of multiple options. And for all you know, after 3-4 years, you will probably see कि record value पे big भी है.
So, talking about big player, maybe a Kingfisher, They have certain vested interest, that's why the property, they are unable to sell. If you see the lower segments, banks are able to sell it.
सामने बोलने वाला कुछ समझ
And the value is small, 1 crore, 3 crore, 5 crore. And the name is attached.
Yeah.
Kingfisher, so nobody want to touch. Cow name is attached, so nobody want to touch.
पानी भी देना
Look at the substance of it. The HFC is actually having the asset which is repossessed now. And there is no interest to be earned on the loan. The substance is that the asset is there, the loan is not there.
So what does that mean?
That means you recognize the asset and not the loan.
So conceptually, when do you recognize an asset? When you have the risk and rewards of the underlying assets. As Himalji said, the risk perhaps hai. So if you are not able to monetize the asset, you will lose. You have all the money in the world to lose, right? Because पूरा loan तो आपका ही है. Rewards है क्या?
It can be illiquid. But does it mean that the asset is only not?
खाली liquid भी रहेगा. Let's say scenarios where he was saying कि big भी जा रहा है. Okay, appreciate होके you are getting good value. But do you have skin in the game for that? The appreciation.
You will not get the benefit. You will get benefit maximum to the amount of.
It's like any collateral that you have ना. For example, आपने लोन के सामने बैंक गारंटी इन्वोक कर दिया तो क्या करोगे? लोन डिफॉल्ट के सामने बैंक गारंटी इन्वोक कर दिया तो क्या करोगे? How is it different? Tangible, intangible, I understand, but how it is different? If you invoke bank guarantee, what do you do? It can be principally a different view, no?
Yeah.
तो वो तो कॉमन होता है, बैंक गारंटी इन्वोक कर दिया, लोन डिफॉल्ट हुआ, तो लोन का जीरो करके बैंक गारंटी का वैल्यू बुक्स में नहीं लाते ना हम लोग. फेयर वैल्यू ऑफ द बैंक गारंटी वी डोंट ब्रिंग इन द बुक्स. You have to apply the same logic here according to me.
So let's see what EAC opined. As per paragraph 3.2.3 of INDAS 109, unless the contractual rights to the cash flows from the loan assets expire or the loan asset is transferred and the transfer meets the certain conditions as per the derecognition requirements of 109, the loan cannot be derecognized. The customer has an opportunity to repay the loan amount before finalization of the sale of the property and take back the possession of the collateral.
Very important point. Very important point.
Further, any excess amount received from the sale of the property during the auction period process, that is sale value less all the dues pertaining to the case, is required to be passed on to the customer. Theoretically, कुछ extra मेरा realization हुआ as a bank or HFC, I have to pass it on to the customer, to the borrower. Hence, the loan asset cannot be reclassified as held for sale at any stage. Loan assets classified under amortized cost category should neither be reclassified as held for sale nor transferred to repossessed collateral held for sale at any stage. If the acquired or purchased asset is to be used by the company for its own use or qualifies for recognition under a specific INDAS, example 10 INDAS 16, the same should be accounted in accordance with a relevant INDAS. So here, because you don't have the upside of the sale under surface C, and the borrower has a right to take back the property after clearing your dues, the committee said that this cannot be derecognized. अगर आपने खरीदा ही है, many a times some banks or HFCs, if the property is good, अभी जैसे ये येस बैंक ने ले लिया रिलायंस का ऑफिस सांता क्रूज का, so if it is of strategic importance to them, they may pay the stamp duty and take it themselves. There is again a process which they have to undergo. but उनको relatively अच्छे भाव पे मिल जाता है as compared to. So in that case, you have to account for it as a PPE or a whatever you know. But otherwise, if you're not done that, till the time you have to keep the loan book, the loan balance in your books. It's just a collateral. It's not your own asset.
Showing, I think as the repossessed asset. On financials.
So banks.
So here I've
many only
I mean, that's what, whether INDAS or not.
so I've analyzed some of the leading NBFCs as per their accounting policies. So LIC Housing Finance, they have classified it as assets held for sale.
But after the ESC, have they changed?
I don't think so. No.
They're contained till March 24, they're contained.
Yeah.
It is interesting.
At least till March 24, they have not changed.
It is interesting.
Yeah.
They would have taken some other counter opinion also, because such a large NBFC would not have taken up a position contrary to ESC.
Most of the finance company have taken that.
But once the EOC on record,
But a lot of companies say it's just opinion.
yeah, but,
It's not applicable to
Yeah.
yeah, but it's
Yeah.
just saying is one thing, but between they would have backed it up with some other legal document.
So they take the opinion, but most of the time, if you go and tell them there is a ESC opinion, they will come back say it's opinion. There is nothing specified in that. So I'll not provide it.
I remember when I think was the 2022, there is one change in the CARO. First requirement, the assets not held in the name of the company. One of the company, I think, Avas or something, I don't remember. We are saying these assets are classified under the non-financial assets, but we are reporting details of the assets not held in the name of the companies are reported.
So all these repossessed assets were shown there.
But apparently, Avas, if you look at the boldened,
Maybe home finance something, I don't remember.
yeah. So they don't, so they seem to be in line all since beginning. PNB again, they are saying that these assets acquired by the company under Surface C have been classified.
But yes,
So again, acquired is probably a different notion. So
yeah, acquired means they are paid stamp duty.
Yeah.
As a result of this practice, the residential properties under legal possession process are not recorded on the balance sheet and are treated as held for sale. So not recorded in balance sheet and treated as held for sale looks also odd.
So थोड़ा है इसमें confusion जैसा है.
drafting में शायद odd है थोड़ा.
Yeah.
Because दोनों नहीं हो सकता साथ में.
Yeah.
Maybe contingent asset दिया है.
नहीं, लेकिन ऐसा नहीं लिख सकता. Treated as asset held for sale नहीं हो सकता फिर.
Not recorded in balance sheet भी बोलना है.
हाँ, but you can't on the breed.
Probably they have multiple scenarios.
Possibly we are not.
They are like very large financiers, so they may be having multiple scenarios perhaps. So
Acquisition maybe by Surface C also there, and on the table also we are doing adjustment.
yeah, something like that. Yeah. So कहने का ये है कि ये थोड़ा है mixed practice जैसा है. Yeah.
But even recently, I saw one case of direct assignment in case of NBFCs. There also, if there is a future interest sharing, they have this opinion that it is a complete sale. But out of the
Direct assignment में भी थोड़ा diversity है.
what diversity?
They have like
Because there is a issue of upfront booking.
Yeah.
You book the gain upfront.
Yes, correct.
And in fact, industry has written it to NFRA saying that this INDAS upfront accounting should not be permitted because in IGAP it is not permitted.
Yeah.
But an NFRA has not modified. They have replied back saying, okay, whatever is there in 109 you follow. Now there are multiple practices.
Yeah.
But I saw one case where company has not recorded upfront income on fair value of the
Yeah.
future, and auditors have qualified.
Yeah.
I think EY or SRBC has qualified.
Yeah.
One of the two. So then there are divergent practices in that case also.
Yeah. नहीं है इसमें diversion तो है.
BFC and specifically financial sector, lot of divergent practices are there.
Yeah.
Because that creates a large upfront income upfront.
True.
From an audit point of view, also you start wondering that whether you should be permitting booking of such a large income upfront.
The EIS strip especially,
Huh?
the interest strip.
Interest rate, yeah. Because you have committed 12% and you are going to earn 18%. So 6% delta is the fair value you will account upfront over next 4, 5 years, tenure, whatever is that. And that amount becomes very substantial.
Yeah.
और उसमें क्या है कि वो स्ट्रक्चर ही ऐसा किया होता है कि उनको अपफ्रंट बुक करने के लिए ही वो ट्रांजैक्शन किया होता है तो
Correct.
you cannot stop him because the transaction was done for cleaning up of the either cleaning
Even
up
for
of-
that matter, since we are talking, even this ARC sale, security receipts, that is also, if you look at it, what happens?
ERC सेल भी एक EAC आया है ना
शायद अभी तक formalized नहीं हुआ. But if you look at the scenario, you get 15 to 20% upfront. And the rest of it you will get only if the ARC manages to recover the amount, and that too वो उनका अच्छा खासा fees रहेगा. So have you really parted with the underlying, the risk and rewards of the underlying loans? And these are all stressed loans, so you don't expect anyways to. Again, that is a structure which is basically to get the stressed assets off your books, right? That's ARC industry works on that model. So again, substance over the form, one can always look into it whether you have actually done anything substantive.
Unlisted ज्यादा है so that
ERC में भले होंगे लेकिन लिस्टेड वाले लोग तो ERC में डालते हैं ना
Axis has sold a portfolio that flowers on the
देसी फ्लावर्स यस बैंक ने भी दिया देसी फ्लावर को
It's more like a financing.
It's more like a finance.
You basically take the stressed assets from off their balance sheet, and basically that 15%,
they are accounting. That's the issue.
Acquire.
they will account for it as a fair value instrument.
Valuation report लेके fair value पे account कर लेंगे उसको.
But
And effectively what happens, this 15% also what they pay, by some route or the other, the money comes back to them. There is no free lunch for it, which is prohibited in RBI. In RBI, you cannot have an interest in the ARC. It becomes round tripping, right? But if you look at the, entire scenario, some of these ARCs through back route, they get some money from.
ARC, when they are recognizing this asset, now from effective interest method perspective, because they are not going to collect the interest.
तो fair value पे करेंगे.
Fair value पे ही करते हैं.
Fair value. That is the initial recognition. Even
fair value. Because ये वो POSI आ जाता है ना, purchased and credit impaired.
हाँ. Fair value पे ही जाएगा वो.
Whenever subsequent recoveries are there on interest portion, how?
So then, if there are subsequent recoveries, they have to redeem the security receipts, which they have issued to the NBFC or the HFC or the bank. तो फिर उससे, but a good chunk of it is their own fees. So अगर मैं 100 recover करता हूँ, तो उसमें से मान लीजिए 30-35 में अपना fees रख लेता हूँ, बाकी मैं proportionately security receipts redeem कर लेता हूँ. ओके ये भी एक EAC से ही है, little long one. Any volunteers to read this?
Thank you.
Yeah, sure, thanks.
Basically, accounting for FLDG obligations by a mortgage guarantee company, repossessed assets. NBFC A is a mortgage guarantee company that provides through mortgage guarantees a first loss default guarantee on retail housing loans to lending institutions / banks / HFC. FLDG is of a pre-agreed percentage, generally in the range of 20 to 30% of the loan outstanding at the time of the default. In the event of a loss to the lending institution on account of the borrower default, the NBFC will bear the first loss of up to 20 to 30% of the loan outstanding, including both principal and interest. FLDG becomes invocable once the loan becomes an NDA and the company starts paying an equivalent amount to the EMI which the lender was supposed to receive from the borrower. Once the guarantee is invoked, A pays all overdue EMIs from the borrower and thereafter continues to pay EMIs due on the loan until the loan gets cured and the borrower restarts paying the EMIs, or the loan is foreclosed or settled following the disposal of the collateral. Since the collateral is repossessed, not in satisfaction or settlement of the loan asset, the repossessed collateral cannot be directly adjusted against the outstanding. A has not previously asserted explicitly that it regards financial guarantee contracts as insurance contracts, and to use accounting that is applicable to insurance contracts under paragraph 2.1e of the INDAS 1.
So here the scenario is that there is a NBFC which takes a FLDG, that is first loss default guarantee, for certain unsecured loans or housing loans rather. As per the arrangement of the FLDG, in the event of loss on account of borrower default, the NBFC will bear the first loss of up to 20 to 30% of all the outstanding loans, both principal plus interest. The FLDG is invocable once the loan becomes NPA. NPA means that it is DPD is more than 90 days, 90 days or above, and the company starts paying an amount equivalent to the EMI. That is, this company, that is a mortgage guarantee company, starts compensating the bank or the financial institution beyond that. Once the guarantee is invoked, A pays all overdue EMIs from the borrower and thereafter continues to pay monthly EMIs due on loans until the loan gets cured and the borrower starts paying the EMI, or the loan is foreclosed or settled following the disposal of collateral. So it's like a guarantee for the NBFC or the bank. Since the collateral is repossessed, not in satisfaction or settlement of the loan asset, repossessed collateral cannot be directly adjusted against the outstanding loan. So question is, how will this company account for this FLDG, or the first loss default guarantee? This is not from the bank's perspective or the financial institution's perspective. This is from the perspective of the mortgage guarantor's perspective. Will it be a financial guarantee under INDAS 109? Financial guarantee is also defined in 109 as a financial instrument. क्या लगता है आप लोगों को?
If you look at the business model, it's like, let's say they are looking at 100 retail loans and they're evaluating it, and then they come to a percentage insurance commission, which they're getting, and which is just from a commercial perspective, they think this is my income, and certain loans which default and that they are paying, that is their cost, just from businessman perspective, not accounting. So that is their income, this, and so some of the loans will default and which they have to pay. It's their cost, and whatever net remains, that is their.
So they'll charge a fees from the bank or the financial institutions for the entire portfolio. But if there are some rotten eggs in the entire portfolio, they will have to make up for the loss to the bank. So like a insurance company, so to say, a model like that.
You have to provide for FLDG on year-to-year basis, fair value basis. You have to do that same evaluation that you do.
Financial guarantee.
It's like a financial guarantee where you'll have to provide for.
So financial guarantee?
That much open end is anyway there. It can come up in maybe low percentage or higher percentage, because the open end is there.
Yeah. So the EAC also opined that A shall classify the mortgage guarantee as a financial guarantee contract under INDAS 109, since FLDG contract that requires A to make a specified payment to reimburse the holders, that is the banks or the HFCs, for the loss incurred if specified debtors fail to make payments when due in accordance with the terms of the debt instrument. In this case, the debt instrument being the mortgage loan. So I think this is straightforward.
What happens in the reverse scenario? How would bank account for this?
See, now from the
NBFC
perspective of
especially.
NBFCs,
There are fintechs where they have taken FLDG 5%.
yeah. So again, earlier, now RBI has come down heavily on this. Ek to, there is now digital lending guidelines, and there is a 5% cap which is there on FLDG. Earlier, commercially, many NBFCs in my experience used to argue that if I have FLDG, there is no question of ECL.
No, that is
Like how आपने जिसे बोला कि real estate. Now what has happened is RBI over the years, since last 3-4 years of inspection cycles, they have not taken this
argument.
That
is correct.
They have specifically said that FLDG, and in that circular also, they have said that FLDG cannot be, so ECL provision has to be considering without the FLDG. Of course, because of this RBI coming down heavily on the FLDG products, and especially post Byju's, collapse of Byju's. So Byju's was a very big FLDG provider. So they were giving a guarantee on behalf. So if anybody has studied the balance sheet of Byju's, which was, bone of contention, late वगैरह हुआ था, उसमें भी they had given FLDGs to certain banks and NBFCs, wherein it was a pay now buy now pay later model, right? BNPL model, where their subscribers, school kids, तो उनके tuition fees के लिए they were arranging for financing based on tie-ups with NBFCs. NBFCs के साथ क्या deal था उनका कि if similar to FLDG, if there is any default, we will make good the thing, because obviously from NBFC's perspective, it's the tuition fees of children, right? So very rarely somebody will default. So, and if Byju's has done a little bit of a KYC or a homework in client evaluation, these will be good assets. So वो समझ के FLDG भी है. So it was a very easy thing for NBFCs to go ahead and sanction those and disburse those loans. After the collapse of Byju's and all that, RBI has come down very heavily on this, and they have come up with various circulars. As far as ECL is concerned, now the practice that I am seeing is that for ECL, if it is FLDG or no FLDG, it doesn't matter. You work out the PD irrespective of that. LGD के लिए you can still figure out. Fight है, but you will have to also go one extra step, as you would do in any collateral. So when Timalji also mentioned guarantor, अब guarantor को भी LGD में जब भी लेते हो, आप सोचते हो कि guarantor का वो उतना औकात है क्या, right? So if the guarantor has the financial standing to honor his guarantee, that also is an evaluation that is required. So likewise, 5% is the cap, but you can consider it for the purpose of LGD calculation. But you cannot factor in a lot of weightage to FLDG now.
No, but I have seen some cases where people do this, they do not factor in LGD, they arrive at a gross number. And then if they have a cash collateral for FLDG.
So EAD में कम करते हैं, right? Exposure at default में कम करते हैं.
Exposure at default में कम करते हैं, या फिर ECL workout करने के बाद उतना amount minus कर देते हैं. कहेंगे उतना तो loss होगा नहीं, I am holding that much asset.
हाँ, मतलब so कुल मिला के another way of आप जो बोल रहे हो is of achieving it is to reduce it from EAD. That is also one practice which I have seen, but if you look at the way
RBI also has
Big Four guidance says is you can max consider it for LGD, but EAD तो आपको without FLDG करना पड़ेगा.
That is why few people are doing that. They do everything at gross. Suppose you arrived at 1,000 rupees ECL provision, and you have on this for this 5% you have some cash collateral.
Yeah.
जितना cash पड़ा है उतना minus कर देते.
Minus कर.
So that is another practice which because there also I was not very comfortable considering where RBI is behaving.
Yeah. Yeah.
But then client comes back and says कि cash पड़ा है आप इस side provision करवा रहे हो एक side cash पड़ा है possible कैसे है?
Right. And
cash तो adjust कर ही लूंगा मैं.
A cash collateral तो you can still fight saying that it is something which is money which is lying with me. FLDG is on paper, right? It is a guarantee on paper.
But mostly now people have started taking some cash collateral also along with that from the FLGD providers.
Cash collateral में reduction from EAD is still justifiable and appropriate. But FLDG को EAD से कम करना थोड़ा stretched है. One can max consider it for the purpose of LGD. But market में, at least in my experience, you all can correct me, but FLDG थोड़ा कम हुआ है.
कम तो हो गया ना because 5% पर आ गया ना.
का limit है.
तो अभी एक max cap के ऊपर आ गया इससे एक नंबर के ऊपर नहीं जा सकता ना.
They can't earn in that. The partners, yeah.
5% in a large book 5-10 करोड़ का फर्क पड़ जाता है provisioning में.
नहीं इसी FLDG देने वाले तभी भी कौन थे? स्टार्टअप्स थे, राइट? बायजूस का तो एक स्टोरी था, बट from a regulated entity's perspective, if rather than your KYC and client, borrower acceptance, if you are trusting on some startups or some, new age companies, credit evaluation, तो फिर तो that's not something which is fundamentally, correct.
ना जो tech provider है, because especially in digital lending, the tech provider said that my tech and my KYC is superior quality, so I will give you an FLDG based on which you are lending. So that was the business model which some of these people started, because that was the marketing pitch at least.
कि वो बाइंग बिहेवियर के हिसाब से वो प्रेडिक्ट करेगा एल्गोरिथम के कितना इसका हैसियत है, एंड दैट इज द रियल केवाईसी आधार कार्ड व्हिच वी गिव. Okay, now let's look into this. कौन पढ़ेगा ये? Any volunteers?
Case study 6.
Thanks.
ECL on credit facility provided by NBFC. So NBFC A Limited has provided a credit facility to individual customers for supply chain finance. Under the facility, NBFC A approves each supply financing transaction at the time of purchase based on the customer's perceived cash flows, repayment capacity using the algo statistical models, and inputs such as past history and known future income. NBFC A has the right to refuse each transaction at its discretion. A notes that INDAS 109 states the following in context of expected credit loss calculation. Para 5.5.20. However, some financial instruments include both a loan and an unknown commitment component, and the entity's contractual ability to demand repayment and cancel the undrawn commitment does not limit the entity's exposure to credit losses to the contractual notice period. For such financial instruments and only those financial instruments, the entity shall measure expected credit losses over the period that the entity is exposed to credit risk. And expected credit losses would not be mitigated by credit risk management actions, even if that period extends beyond the maximum contractual period. Question: how shall A calculate ECL provision on this credit facility?
So under INDAS 109, we all know that ECL is not only on the loan which is sitting in your balance sheet, but if there is a loan commitment, Okay, you have sanctioned, but it is not disbursed. Still, you have to make a ECL provision on that part, even if it's not recognized in your balance sheet. Everybody is familiar with this, right? So, Abhi, this scenario is like this, that there is a credit facility that this company has given to its individual customers for a supply chain financing. Under this, the company approves each supply chain financing transaction. So every time there is a bill payment that the customer is wanting to finance, there is a process of approval that this NBFC does. So at the time of purchase, based on the customer's perceived cash flow, repayment capacity, based on various things, NBFC theoretically, as a contractual arrangement, has a right to refuse each transaction at its discretion. Practically, it may or may not do it, but contractually, it has a right to refuse each transaction. There can be certain criteria based on limits, based on certain values, based on certain areas, etc. It may say no. So in this case, question is whether ECL you will calculate on the entire facility. So because you would have given a sanctioned facility, right? Of 10 crores, whatever, 1 crore, 2 crores, whatever. Or one can say that because every transaction I have a right to refuse. And every time there is a supply chain financing transaction, I, as an NBFC, has an opportunity to look into it and say yes or no. That is why can I argue it is zero. There is no committed finance. Every time there is a transaction for financing, I will look into it at that point in time. But at the balance sheet date, I don't need to have any ECL provision on this specific credit facility. या तो आप पूरा करोगे जितना आपने सैंक्शन जितना आपने लिमिट दिया है, या आप बोलोगे कि ये ट्रांजैक्शन टू ट्रांजैक्शन, सो जो लोन आपके बुक्स में है वो उस पे तो ECL करना ही है, उस पे तो कोई बहस ही नहीं है, राइट? द क्वेश्चन इज ऑन व्हाटएवर हायर लिमिट, व्हाटएवर फैसिलिटी यू हैव गिवन, उस पे पूरे पे करने की जरूरत है या नहीं है इस सिनेरियो में. It's not like a sanction letter which you have signed and given to the borrower and he can draw down based on that. Is it a commitment? See, the word is undrawn commitment, right? Is it a commitment from this company's perspective, NBFC's perspective? It's not. Because oftentimes in practice, something which, at least in the NBFC scenario, one may probably come across such things, that whether it's a commitment or is it just a facility which you have given, wherein you have, rights to, you have the power to not sanction the specific drawdown. So everyone agrees that it's not a commitment and you don't need to do a ECL on the rest of it.
Good possibility to argue ये करना चाहिए. Good possibility to argue ये करना चाहिए. Because it's AI based. It's like a credit card. Credit card में limit sanction कर दिया. So there is a good possibility that it will be approved, even if.
Good possibility hai, but contractually.
Otherwise, the situation will never come. You can argue it this way for all undrawn commitments.
No, but generally.
Even in case of a term loan, next installment drawdown करने को जाओ, I have a right to reject.
No, but sanction letter में you have an unconditional right to draw down. If it is, let's say, if I take a housing loan and I get a SBI या HDFC,
पहले दो installment default किया हुआ है तो तीसरे
नहीं वो बात अलग है. The definition of commitment, loan commitment is if there is a default before, in one of the, before further drawdown, then that is different thing. But if there is no default.
To say is that there will always be a clause somewhere where at the time of drawdown, bankers will have a right to reject if there is a deterioration in situation or any other condition.
But
There could be cases.
So in that definition of 109 of loan commitment, if those are the only conditions, then still it's a commitment.
So those will be just a protective.
It's a
right.
protective kind of a right.
You will not deviate, right? But that should not be factored in. Because in this scenario, you have not censored. The sanction has not come.
There is no kind of a blank check, so to say, or a sanction letter, so to say, where
OD facility में कैसे करोगे?
OD facility.
OD facility में भी आप हर एक के लिए जाते नहीं हो.
नहीं जाते हैं ना.
That is a loan commitment.
That's a loan commitment. There you have censored the amount.
Similar to an OD facility, only thing is that वो AIF के through जाएगा, कुछ करेगा या नहीं करेगा.
So contractually, NBFC has a right to say no as against a OD facility.
Substance, it may be possible that whatever is coming in.
Practically, it may not happen that way.
See, financial instruments का sir, contractual अभी CCD में in substance क्या है? So ठीक है, we do that split accounting etc. But you know, substance is one thing one has to understand, but contractual terms is all about contractual terms, right?
Then there is no.
So NBFC A has the ability to approve each transaction at each time of supply chain financing transaction, because NBFC has the right to refuse each transaction at its discretion and on the assumption that it actually exercises the right in practice, then the contractual credit limit should be considered zero, and consequently future drawdowns would not be taken into account for easy. What is important here is that you have an unconditional right to say no. You may have your own logic, why yes, why no, but that's entirely your discretion. It can be based on an approval within the NBFC's administrative thing. So this is different from a sanction, a OD facility or a loan, sanction letter that one issues unconditionally. It may be subjected to certain protective features like आपका credit rating deteriorated हुआ before the drawdown. I have a right to say no. That is a protective. And that in the ECL you will consider, right? Even in a loan, even when you have disbursed a loan, you have covenants, right? आपका उसमें भी अगर covenants breach होता है, you have a right to call it back. So that you will always have in practice.
There is one somewhat similar discussion for it. So let's say there's a lending institution. In the whole process, everything has happened. Let's say it's an OD facility and the OD has been approved. Now there comes a stage that between the customer and the lender institution, all the documentation signing has to happen. Which in practical process, it might take few days, but effectively everything has happened. Right? Customer has agreed and just the signing is done. So that couple of days which are left, and in that there is a cutoff date of 31st. So, and then there was this whole calculation that so many loans are there which are approved, just the final signing is done. And in substance, what is happening every time? Okay, this is just paper formality. So on the cutoff date, there is an amount X crores which is there like this. So whether it should be included in ECL calculation and so on and so forth, and everywhere in the whole, everywhere in the financial statement for such considerations or not.
But before 31st March, there is no sanction letter or there's no formal sanction letter that got issued.
Then it was decided that on basis of contractual terms, it won't be included.
Yeah.
It dragged on for quite a while that whether this should be taken into account or not, because in substance, everything is done. And in practice also, then if we went into in practice what has happened in past, how many such loans are there, how many actually were not given after that. So that number was obviously negligible.
Yeah.
But then still it was decided on the basis of contractual terms, signing has not happened, so don't.
I would tend to agree with that conclusion, because basically, ultimately, it's all about what contractually has happened. you may have an informal kind of everything is done, but paperwork is remaining. But as auditors, ultimately, it's all about paperwork, right? So, okay. I think last 15 minutes, this is the last one. Yeah, thanks.
Case study 7, convertible bond with ratchet fee. A Limited issued preference shares. The preference shares carry a discretionary dividend of 2%. The preference shareholders have a right to convert the preference shares into ordinary equity shares if there is an IPO or earlier, if agreed by 60% of the preference shareholders. If not converted, preference shares are redeemable at par at the end of 8 years from the issue date. The conversion ratio is fixed at inception at one ordinary equity share for one preference. However, the ratio is subject to anti-dilution clause. If the entity in future issues any new ordinary shares or convertible shares at a price or conversion price lower than the conversion price of the existing preference shares, the conversion price of the existing preference shares is adjusted down using a prescribed formula. Question: how shall A classify the preference shares under INDAS study?
Liability.
Cash component is there. You cannot deny. So after the end of 8 years, you cannot deny cash.
But the ratio is fixed, right?
No, but means if the IPO doesn't come through, then it is encashing.
Okay, but IPO,
May or may not come. So that is not it.
okay. So we have one view here that it is financial liability. Any other thoughts? Any contrarian views? So clearly in this case, there is a protective right to the preference shareholders through a ratchet feature where basically if you come up with an IPO, you have a right to convert. The ratio is fixed on day one. However, there is an anti-dilution clause, which means that if the entity in future issues any new shares or convertible shares at a price or conversion price lower than the conversion price of the existing, so there's a, if there is a kya bolte ho, round, you know, yeah, so if there is a you know a further issue of to another investors at a lower fair value, lower, then they will have to match, right? They will have to be compensated. So will this vitiate the fixed for fixed criteria?
One thing connected to this, so one valuation assignment what our team is doing for issue of such an instrument. So one thing what we are studying is whether and how to value it. So we are doing it on basis of scenarios and then using probabilities or else Monte Carlo, that in scenario of redemption this is going to happen, in scenario of conversion again probability of 60% or IPO.
Yeah.
So I don't know if that can help in this topic. So that is one way what we are looking at, if we can value it that way.
So everybody agrees that it's financial liability, no scope for financial for equity. Okay, yeah. Let's see the answer. The requirement to redeem the issue at par after 8 years creates a liability component which would be extinguished if the conversion option is exercised. As such, the presence of redemption obligation makes the conversion option a derivative. In this case, the fact that A has control over the ratchet feature is triggered through issuance of new share is not relevant because IPO is not in his control, as you rightly said. The derivative cannot be settled only on a fixed for fixed basis. So the redemption obligation is a liability component. In fact, here you would also have an embedded derivative because it's not just an amortized cost liability. You have written a put option to the investor saying that if IPO, if a down round comes, or if I come up with a successful IPO, you are entitled to convert. So वो क्या सोचेगा मुझे पैसा कितना मिल रहा है versus मेरे shares का भाव क्या हो रहा है. So he will have an option to play around with. So that, and I have written an option. So I not only have to treat this as a financial liability, but you will also have an embedded derivative feature, which probably from the perspective of valuation, आप जो बोल रहे हो, that can be one way of splitting the embedded derivative. So how do you split a liability, a host financial liability and an embedded derivative? You don't do what we discussed earlier, DCF of the interest component. You value the embedded derivative first. Maybe आप जो बोल रहे थे Black-Scholes वगैरह लेके वो सब, and ascribe the rest into the plain vanilla financial liability. So yeah, what you said is relevant from a valuation perspective in this case. Yeah, so I think those were the case studies.
If you just chat, like if you have an like CCP or SAFE agreement or any kind of convertible instrument agreement from the client, I know it's confidential, but we put that in the chat GPT and ask the measurement, classification, and the valuation. So the point which he was mentioning about the valuation, so it will give you a valuation doing a probability. Like what is the probability of going in IPO and what is the probability of going in redemption?
Yeah.
This is that it will calculate and it will give you. I don't know, like you have to validate that again.
Yeah, chat GPT काफी दे देता है.
But at least it will give you
The liability portion दिखा देगा मतलब वो derivative का valuation दे देगा.
नहीं, derivative का भी एक rough calculation दे देता है.
दे देगा वो.
Chat GPT these days can give you any probability. The other day I put what are the chances of India-Pakistan war? It said remote, but it gave some logic.
That's the main point.
No, I'm not saying you have to be dependent, but
It gives perspective. Starter as a starting point.
Yeah, it's a sanitized document. You get a starting point.
Yeah.
And again, the confidentiality and all that.
Yes, sanitize everything.
Yeah. So those were the case studies. In case we have, I think 2-3 minutes more. In case any other questions, happy to.
About that asset held for sale direct in let's say that asset is units of mutual fund. And I don't know if under surface it can get covered or
No,
not.
it will not.
So then it's not.
Surface is only if it's a housing
There could be a
finance.
similar example in case of a personal loan or secured personal loan, all those type of cases.
Yeah. So let's say if you have a vehicle loan company,
vehicle loan में भी होगा.
आपको any collateral which is physical, and if there's a default on the loan and you repossess or you have a right to repossess the asset, the tangible asset, then gold में भी हो सकता है, loan against gold.
में हो सकता है.
Yeah.
In all that cases what we discuss will hold true.
Should hold.
Principally, yes.
Principally, yes.
इसमें the basis of opinion was the SURFACE Act provisions. Unfortunately, in those cases, you will have to go by the loan agreement itself.
In such cases, that there is a difference between mostly you will have the listed shares or the
Unlisted shares.
Yeah.
or the listed mutual funds. Mostly you will be realizing and squaring off your loan.
Yeah.
The time gap practically would not be such a large. So immediately you will just dump it in the market, get the money back, finish it off. So वो issue इतना बड़ा होगा नहीं because of the time gap. He's right.
He's right. So listed shares है तो आपको इतना लंबा नहीं होगा.
I'm doing one of the NBFC where the loans are given against mutual fund. In case of 7 days to pay, mutual funds are.
Yeah. तो इनफैक्ट इफ द वैल्यू डिक्लाइंस द मार्जिन कॉल स्ट्रेट अवे ट्रिगर्स, आपको वैसे ही वो हो जाता है, इतना नौबत नहीं होता है. इट्स नॉट सच अ लॉन्ग ड्रॉन प्रोसेस.
So you have to understand whether the property is sellable, not sellable. In case of immovable property, it takes some times.
इन केस ऑफ व्हीकल लोन्स तो इट्स अ मेसी थिंग. आपको मिला भी तो कुछ सेकेंड हैंड व्हीकल है, कुछ भाव मिलता नहीं है.
बेचना भी इतना आसान नहीं है ना.
बेचना भी आसान नहीं है. एंड
इट्स अ प्रोसेस ना, रजिस्ट्रेशन, आरसी,
या
ट्रांसफर, ह्यूज प्रोसेस.
Yeah.
नॉट सिंपल.
इट्स नॉट सिंपल. सो
टू व्हीलर और कंफ्यूजिंग.
या सो इतना कुछ, it's a depreciating asset, unlike a real estate, which is probably you will still have some value.
B2G example, in case of PCL, government business.
हाँ.
So I'll look on the revenue recognition side. In case of performance obligation. Now, let's say a company is dealing in delivering of service, let's say town planning assignment, you could develop from a plan, let's say PKC का town planning करना है, कैसे जाओ. Now, in case of this, you share the draft version. Government तो आपको confirmation देने का नहीं, is this okay not okay. And you also know कि एक बार में okay होना ही नहीं है, there will be a
Multiple, हाँ.
Now, performance obligation का completion पे कैसे होगा?
But you will have some contractually, कुछ तो आपको एक milestone defined रहेगा ना.
डिलीवरेबल कुछ तो होगा ना. एक प्लान दे दिया, डिजाइन दे दिया.
प्लान दे दिया, डिजाइन करके दे दिया, फर्स्ट वर्जन दे दिया. Now उसके बाद तो
But at a senior level, it has to be.
बट गवर्नमेंट का आदमी वही होता है, तो इट विल टेक लॉट ऑफ टाइम. अभी आज तो मैंने जाके देख लिया, गवर्नमेंट ऑफिसर तो कल का कल जाके देखेगा नहीं. इट्स अ लॉन्ग प्रोसेस. वैसे एंड अगेन व्हाट विल हैपन इज इट विल गो फर्स्ट एट द लोकल, देन इट विल बीकेसी लेवल, फिर अगेन बॉम्बे लेवल पे जाएगा, दे विल सर्व यू अप. So at what point where do you stop?
Judgmental है. There's no probably straightforward answer.
Correct.
आई थिंक प्रैक्टिसेस पे जाना पड़ेगा.
मेरा तो अगर कोई चेंजेस आएगा तो मैं कर देगा, बट नाउ कितना क्या चेंजेस आएगा, बिकॉज़ वो फॉर्मली गवर्नमेंट से अप्रूवल लाना कोई भी चीज की तेरा काम हो गया. वो
पेमेंट माइलस्टोन्स के ऊपर कुछ है क्या उसमें से भी यू कैन गेट सम
नहीं,
हिंट.
वो डिले ही है सर, वो तो डिले है.
हां, नहीं माइलस्टोन्स इन द कॉन्ट्रैक्ट इफ दे आर मेंशन्ड दैट विल गिव यू सम इंडिकेशन दैट यू कैन लुक एट
No,
द
practically not relevant.
नहीं, but what's your overall contract? आपका काम क्या, ये क्या है?
Planning का काम करने का.
प्लान
So
सबमिट.
it's just an advisory
एडवाइजरी along with डिजाइन होगा ना.
हाँ, वही डिजाइन.
design,
So from architect perspective.
architect kind of a thing.
I think POCM could also be an option in this case.
That's what I think he's trying to explore, no? Okay, whether part of it,
So you can see percentage completion determined as per your cost.
input method.
I was about to say method can work.
Input method may work similar to real estate contractors, that this is the total obligation. I have done so much. This is my
तो स्कीम है और कोई कलेक्शन ही जगह नहीं. तो इस केस में क्या होता है?
actually practically अगर collection task है ना तो POCM करके
नहीं करते.
PST का नुकसान ही होगा.
Like some of our, like in my experience, some of the larger companies also, सामने PSU का है.
हाँ.
और PSU के चेयरमैन कम मैनेजिंग डायरेक्टर का अप्रूवल भी है, फिर भी दे आर नॉट रिकॉग्नाइजिंग द रेवेन्यू बिकॉज दे नो के इट्स गोइंग टू बी अगेन मिनिस्ट्री, ये वो सब, इट्स अ पॉलिटिकल थिंग आल्सो. सो इट इज एक्सट्रीमली जजमेंटल. वन कैन
प्रॉब्लम क्या है, नाउ यू आर इनकर्ड अ कॉस्ट. ठीक है,
तो इन्वेंटराइज कर सकते हो ना कॉस्ट को. आप कॉस्ट को इन्वेंटराइज तो कर ही सकते हो ना.
क्या है, बहुत प्रेशर है प्रॉफिट, मतलब मल्टीपल इम्प्लीकेशन, प्रॉफिटेबिलिटी है, प्रॉफिट नहीं रहेगा तो टेंडरिंग इश्यूज, बहुत सारा.
so the direct cost you can, if you are at an overall contract level you are comfortable, you can say that it's a contract cost of fulfillment contract. There's a
revenue equal to cost वाला जो concept है वो भी यूज कर सकते हो ना. You can do that much.
but if you are not comfortable of
Then it's difficult.
realization, थोड़ा
हाँ,
फिर आपको ECL भी करना है यहाँ पे.
रियलाइज नहीं, क्योंकि क्या है कि आप बुक कर दोगे रेवेन्यू और जीएसटी भर दोगे तो पैसा भी आएगा, लीड होगा तो आउट ऑफ पॉकेट चले जाओगे.
He is asking more on the like whether it is revenue or not. Once it is revenue, it changes the form from revenue to receivable.
बराबर है, but क्या ना इसमें तुमको पीछे जाना पड़ेगा, backtrace करना पड़ेगा. In the past क्या हुआ? In the past मैंने example जितना टाइम में मैंने submit किया जो टाउन प्लानिंग का काम उसका पैसा कितना टाइम में आ रहा है, that is again a good indicator.
All those things.
But इसमें क्या है डेटा लिखूंगा तो उसका फायदा है पीएमसी एग्जांपल बोलेगा अप्रूव करेगा फिर वो पीएमसी भेजेगा पीएमसी फिर आगे भेजेगा वो सेंटर को भेजेगा इट्स अ लॉन्ग प्रोसेस फिर उधर से वापस अप्रूवल भेजेगा अगेन टाइम वैल्यू मतलब
And which political party is in power, वो सब भी factor in हो
अभी
जाएगा.
अपने को मालूम है कि रिफंड लेने के लिए ऑफिसर चेंज हो गया तो नया स्टोरी इधर तो इतने सारे लोग बाबूस लोग इन्वॉल्व
महाराष्ट्र में जाएगा तो पैसा ही नहीं महाराष्ट्र
यही लगता है बहुत सारे स्टेट्स स्प्रेड अक्रॉस स्टेट्स
सब वो 1,500 बांट के.
If you see, ये जो केस आया है, the company supplied material to the government at very exorbitant prices. The matter was discussed in the Vidhan Sabha of Maharashtra, how they can supply at these prices. Payment रोक दिया है. So in such cases, ECL तो ठीक है, उसका recoverability के ऊपर question.
The Maharashtra government contractors, like excluding BMCMC, so much receivables are now reached on the almost 90,000 crore.
स्टेट में चैलेंज है महाराष्ट्र तो पंजाब का तो बैलेंस शीट सामने ही है
I think, right then, yeah, with this we can conclude.
Yeah.
Or you have anything to share?
I just have
Yeah.
one practical example on the instrument, which I've dealt in my client.
बोले ना.
It was a financial instrument, like it was a convertible instrument where an X amount was received from the
Investor.
investor, and against that they have issued this instrument, and that instrument has a various features. It was like it does not had a redemption clause that it was not going to redeem. Okay, you have to convert, and the clause was like it will be whatever the amount you have given to us, it will be like we give you 80% discount, like 20% discount on that, and it will be issued at the fair value
Okay.
of the future date. So like I'm just giving an example. 100 rupees is the amount which we receive. So 100 divided by the 80% of the fair value of that the day when it is going to issue. So it on a nature it look like a fixed to fix.
No, but if it's under future date, it will not be fixed for fixed.
Yeah.
स्टार्टिंग में
हाँ.
उधर से निकल जाएगा.
No, but I'm saying the amount, the number.
The formula is set, you're saying, कि whatever date of conversion, उसका 80% discount, that will be the conversion price.
Yes.
But वो 100 मालूम नहीं है तो उसका 80 भी नहीं मालूम है ना आपको.
हाँ, but what's the question? It's a
Question is, I'm just giving.
equity versus liability है. That's a question. No, it will be a financial liability because as he discussed and we discussed, it is basically your day one ratio is not fixed. So paragraph 16 का criteria में बैठेगा नहीं है equity के.
I think with this we can conclude it. Future program is on 14th June by Prashant Daftari on SS 600 using the work of another auditor.
I think it's a very relevant topic.
Very relevant. So please come prepared. And future.
We have faced a lot of difficulties.
And I think some of the future programs where you can participate, maybe we are talking about, I think we are discussing on the some sort of program on ESOP. You can think about something on impairment or maybe a going concern specifically. And if anybody wants to read on particular topic, you can contact Prashant, me or Santosh and Ines.
The objective of this study, but is also to encourage new speakers to take up some sessions. And this is not a very large, so it's like a good starting point.
Good place to start. I think next after that, one or two topics if we can streamline, since everybody is here.
So we can take our topic. Anything we have decided what will be the next, other than the next one on the 14th.
आप बोलिए, but you have some suggestions.
I have not
Goodwill impairment. What is of it? You can take it. Goodwill impairment.
It can be topical, it can be also FRRB, some common mistakes or something like that also can be discussed.
Think about impairment that.
Impairment of goodwill is very narrow.
Overall
Overall impairment करना है तो.
So I would say
मैं तो कैसा ना intangible assets का भी valuation है वो बहुत चल रहा है तो अगर कोई practically lot of payment is happening और कोई जल्दी से goodwill कम दिखाना है क्या intangible assets को जाती है.
So that means you have to take then business combination, PPA, and then go forward down. So business combination under fair value, PPA, other implications. I think then it will have a complete 2-hour cycle. अगर business combination करना है तो.
I think somebody can volunteer. It's still 2 months.
2
All
months
can
to
prepare, yeah. So for someone.
Full audit.
But I think after that एक plan करना थोड़ा भी जरूरी है.
Yes.
So we have to do 6 in this full financial year. Minimum 6.
If you want 12, we can do 14 also.
So this is the second, June में third रहेगा. Thank you. Without sugar रहेगा.
Without.
You can also suggest certain other topics also where.
My issue.
It can be sector based also.
Maybe pharma sector, maybe
Monday morning मैंने मोकला
Sector wise.
also good topic.
Non-five sector where you can take it. PLI is the hot topic especially for
PLI can be a
whatever he has said.
government grant.
government grant is the hot
कर
topic.
दे Monday morning कर दे. Sorry.
Saying about PLI,
हाँ.
the government grant, full government grant.
वो भी चल सकता है. कोई भी एक.
It will be relevant.
But PLI actually बहुत hot topic है.
ले लीजिए आप.
ले लीजिए.
July में we can then pencil in the
Whatever date you say.
Saturday, yeah.
I think July first week लेंगे ना तो फिर pressure भी नहीं होगा उतना.
हाँ.
Second week से pressure चालू हो जाएगा.
The client I look at is a full audit. Quarterly audit. First week तो चलेगा. 5th July Saturday. On Saturday.
Yeah, Saturday. क्या होता है Friday रखते हैं ना 6 से 8 बाद में निकलने को कुछ मिलता नहीं है लोगों को.
And possible because
Time can be 3:30 के बदले अगर time available है we can push earlier, push back also something. 4 से 4 से 6 करना है, 2 से 4 करना है.
Early part of July में थोड़ा easy पड़ेगा before the real work starts.
First week, first Saturday of July, that is only possible.
That's a good sign.
I agree.
तो this PLI गवर्नमेंट ग्रांट है, स्कीम्स का कंडीशंस क्या है, अचीव होता है नहीं होता, दे कुड बी. और काफी सारे सेक्टर्स को कवर कर रहा है PLI अभी.
बहुत सारे sector. And actually they are releasing the money. That is a good thing. So I know I'm doing right. So they approved on 31st December and released the money next year. So that's very good. Releasing the money.
सेंट्रल गवर्नमेंट स्कीम्स में पैसा निकलता है, स्टेट गवर्नमेंट स्कीम्स है लार्जर प्रॉब्लम बिकॉज उधर ने स्टेट गवर्नमेंट ने इतने सारे सोशल ऑब्लिगेशन बना दिए हैं, ऊपर से पैसा बचेगा तो इधर कोई पैसा निकलेगा. हाँ सेंटर
Thank you.
Thank you. Thank you.
I'll try.
Chat filled out.
Thanks, Santosh.
Thank you.
Good participation.
Nine questions कुछ.
हाँ but cases check करने हैं. तो IT वाला करके क्या है?
क्या करते हो? एक साथ बहुत प्रोग्राम चले थे तो आईटी वाला भागते रहते हैं और जहाँ प्रेसिडेंट और चेयरमैन बैठते हैं उधर ही जाना चले चलो
कोई नहीं आईटी में
कैसे जाओ
एडमिन बना दिया और डायरेक्ट
करना है तो कर सकते हैं, मैं या वट एवर यू कैन से।
इंटरेस्ट रहेगा वो पड़ेगा
चलो प्रशांत में चलो चलो संजय सर
Fine.
चलो अच्छा तो
Okay, sir.
ओके
मालो आज तो था ना
बोलो बोलो
Okay.
लैपटॉप पढ़ाई